What's going on, everybody? Good morning, good afternoon, good evening. Glad to be here with you all. Looking forward to this session. Seems like a lot's going on, even here looking at gold, right? We got a lot to talk about after that big move on crypto over here. We can see the Nasdaq still up on the day. There's a lot to discuss. There's a lot to take in over here. We start over here, 9 o'clock a.m. 9 o'clock a.m. Eastern time, every day, Monday through Friday, half hour before the markets start. Graham, if you want to be alerted, in the description below is a Telegram channel. It's a broadcast channel. Whenever we're going live, I go ahead and let everyone know. Go ahead and do that. Just want to make sure, if it's important for you to comment over here, I want to see and make sure who's here and what's going on. That's all. Jason in Hong Kong, Canada. Great to see you all. All right, everyone. Let's take a look over there. Are we close to increased demand for dollars? You know what? We could only follow the levels. Yesterday, we changed the DXY. We looked at what was going on and where we might be looking to take a long position. We'll go and review that again this morning. Mr. B in Amsterdam, Roman, what's going on, everyone? All right, let's take a look right now across the board and get a feel. Get some good clarity for how we're going to go ahead and approach this. We're going to start with the indexes. We're going to start with the S&P 500. Then we're going to look at the Nasdaq, the Dow, the Russell. After that, we'll look at the DXY. Then we'll take a look at the metals, gold, silver, drop down to Bitcoin. Take a look all across the board before we get into FX. Starting with the S&P 500, by the way, you could see yesterday in the afternoon video, I was like, I don't really see anything over here that we peeked out about. We looked across the board, whether it was at the Nasdaq into the resistance, whether it was the Dow into resistance, or the Russell also into a bit of resistance. Someone made a comment, hey, Jordan, go ahead and clone one of the lines. And let me go ahead and do that. I'm just cloning a random line. And then I'm focusing over here, right? I'm focusing over across the board. There's so many touches. Hold on, where did I just put that line? Before I put it down, I want to show you what my eyes are drawn to. I put the mouse exactly where my eyes are going over there to find that level. You can see over here is where my first eyes are drawn to, right? Then follow that to the left, right? Is that a line down over there also? And then resistance there. It's there. It's there for, not even there. It's there for sure. It's clean. There's a lot of touches over there. And it belongs there. I guess it wound up being a more helpful guide than I thought it was going to be. I'm glad that was pointed out. I'm glad to have it in there. I feel like these lines, which were originally placed all the way back in May, and then have continued to be expanded, need to be cleaned up a little bit. This is a long time for us to be holding this channel over here, these trend lines, but that's where we are. So, all right, where does that leave us though? However, right? And by the way, you can see over here, maybe that should be up a tiny bit, right? I'm going to go between, try to hold those touches, that touch, resistance again there. It belongs there. I should have had it in there. I'm glad it's in there now. What I'm focused in on here is you could see the entry CCI. If you don't have this on your chart and you want to, all you need to do is go to your indicators, by the way, inside Trading View, and just search True Trend. And then you could pull it up. This is the True Trend, Conquer Trading and Investing, not the BTC version. That's all. You can see the entry CCI is starting to pull back now. That's a good sign over here. I don't think I'm ready to look to attack yet. That's the first. We've seen a pullback. We've seen a series of lower highs right now. A resumption off. You know what? I'm just going to sit and wait a little while. Personally, I would like to see a deeper, further bit of a pullback or see what happens. But I'm not ready to dig in over here just yet. That's myself. All right. Now, some possible things you could be looking for is a further pullback back into this big trend line over here. Is there any horizontal support over there also? Not too much. Not too much. We're getting back near new all-time highs, so there's not too much support and resistance in between. I'm leaning off these trend lines, right? Could you take this trade over here if you made a higher high? I don't like it coming back into that resistance. I don't like it right now, even though the market is very overbought, and overbought can remain overbought when it gets like this for an extended period of time. I just don't feel the need, a few weeks before the election here. I don't feel like we have that stimulus carrot. By the way, this was also a bit of like Johnson & Johnson had some bad news about the vaccine, right? That during their trial, someone became very ill. They didn't say what happened or what that illness was, but that they had to pause their trials. We saw that happen over across the pond as well a few weeks ago. So, the market kind of backed off a little bit. I don't know. I just feel like waiting and not, we took a nice piece out of the market last week into this week on the Nasdaq. That was great. Just hang out a little bit. What about here on the Nasdaq? You could see that the up on the session, overnight. You could see that we came also into the resistance again overnight. That trend line is now held twice. On the Twitter, someone asked for those lines over there. I went ahead and drew them in. Let me go ahead and just share that with you. If anyone is looking for this, right, I included the two charts giving that the extended view of those lines. If you want to see where they originated and where they start. For the S&P, it was this prime trend line over here was the first, right? That was all the way back sometime, I believe at the end of May that we started using those lines. And then we just cloned them in. So if you want to go ahead and see the long version also on the Nasdaq, I'll go ahead and I'll just include this into the chat for you. And then you could, I don't know if Timeline will give it to you. Here, let me find this post. There it is. Alan, good morning. Yeah, the polls are flawed. We know for sure. Stefan, the polls are flawed. All right, let's figure out what else is going on over here. Let me keep going. Let me find a flow over here. We got the Nasdaq into the trend lines over here. Resistance twice. Pulling back I'm pulling this up because we've been so overbought. I'm trying to get a little bit of a guide. Normally, I'm not using the true trend as a guide here, probably because from all the years that I've used it, it's kind of ingrained into my mind. I just could follow price alone. Nevertheless, you could see that we still remain here above the zero line, overbought for a really extended period of time. Now, whether or not that leads to a crash down or just a small pullback into support resetting the entry CCI, I don't know. But right now, there's zero edge. There's, you could see resistance, support. We're kind of in the middle, overbought. Standing aside right now is the strong position. What about on the Dow? Let's take a look across the Dow right now. Right into the resistance. It was the trend line from this channel over here and also the horizontal right over there. What does that mean? For me, this is a little bit more clear. This means this lower trend line over here, right? A pullback into it, right? That's a place of resumption off that I would look to pick up a long position because my risk is capped. I know where I'm wrong. I'm looking to go ahead as I get into that resistance, tighten up my stop loss, and go ahead and maybe take a small piece of profit, but ultimately looking for the break up and to push that trade. That's not happening now. Again, sidelines on the indices is where we're at. That's good. It's good to know exactly where you're at. Here on the Russell 2000, let me take a step back over here, okay? We never made it into my big supply zone, that blue box where I really thought we would sell. We came into this bit of local resistance over here. We actually peaked out right exactly on that level, that resistance level, right? You could see that it was already there. That's where we topped at. What does this mean? If you see that, like this is actually showing this is not so overbought by any means whatsoever. We're pulling back into this is now support. That's a light local support over here. So out of all the indexes, actually the Russell is giving the best indication of perhaps looking for a trade over here. You could see this is the parabolic trend line I have in as a guide over here. Thank you very much. You can see this trend line as a guide over here. And as long as we're above that, the bullish momentum is really there. Now, a break of that trend line, right? That's the warning sign that this move is over. We could see a bigger retracement. We're not even close to breaking that line. And by the way, as we come into it, you want to try to lean into it if you resume off of it. This support over here and this trend line, you can see both of them, the confluence right over here. As long as you're above that, very, very, very bullish. Would you take a short here if that broke, right? I know, listen, I'm not in the habit of looking to go ahead and in uptrends short things. The equity market is going into the election, though. A technical break like that, I might be inclined to take that, especially at that point if that was a lower high over here. might be something interesting to watch. It would be an aggressive trade. Nothing wrong with that. Lining it up ahead of time. All right. So what else? Let's move over to the DXY. The DXY, again, a couple of things to mention over here. First of all, so far, there's like the dollar's up 0.25% today. Okay, we're gonna look at gold in a second, which is off. But you're seeing the dollar bid, gold off. That's been the norm, right? That's been the norm. 3 weeks to the big unknown of the election, and it's what happens after the election too. That is going to be the big unknown. Figure that all out as it comes. You know, I was thinking this morning as I was making my coffee, Jordan, what do I want to do? What do I want to do as we come into this election, which is not like any other election that we've all experienced in the U.S. before? And you know what? As I was sitting there thinking about it, really, what the conclusion I came to is that I want to be really, really sharp. I want to be. There could be some massive moves. I want to make sure that I'm ready for anything, and that's exactly how I'm going to take it. I just want to make sure that I'm really sharp, that I'm prepared for anything. And then, you know, let's see what happens. Instead of trying to predict what happens, let me just make sure that I'm ready for whatever happens. All right, so here on the DXY, okay, you could see that so far this trend line over here is holding, right? Again, this was drawn in before we came into it and tested it and held, right? There was the resumption off of it. But this is still a very bearish momentum over here. We're still below this area over here of 1938. By the way, I said that I was looking to move that up. I did move that up. It didn't stay. I'm putting it up over here. Hold on one second. I'm just moving it up there towards 93.50. Towards the top of that range. Remember last week we had 93.50. Now that we've broken below it, the resistance here I think is right up there and right over here. I think it's a better level to have it. As long as we're trading below 93.50, the bearish momentum continues over here. I'm also watching this trend line. A break above both of those, then I believe we see a quick move up into here. We'll look at gold in a second. Keep that in mind. This is bearish. We're looking over here for this current trend to continue, especially below the horizontal 93.50. I'm watching that trend line at 93.50, a break above it. I expect a quick move and maybe more. Quick move to 94, right? And then you have that trend line resistance right there. I'm watching that. That could very well happen this week. But until that happens, maintaining that dollar weakness over there. Okay? Now, with this in mind, if this were to break, let's also look at gold over here. So far, gold had the breakout, and this is the retest happening right now, right? This is the retest. A resumption off here absolutely brings a long signal. Absolutely brings a long signal. Let's look what happens if this retest fails, right? Because actually, the dollar is lagging here. Gold's a little bit ahead of it. Because if the dollar broke this area, that would really put pressure on gold, right? So let me just step back for a second, okay? Do you see this trend line I have over here? I'm gonna go ahead. I'm figuring this out for myself right here, right now. So I'm gonna clone this trend line over here. I'm seeing over here. I'm just looking first. I don't know if I want to do this. I'm looking over here and I'm seeing that last trend line because that's what the market's more focused on right now, right? So why I'm doing this is to protect myself. What do I mean by that? I'll tell you in 1 second. What am I doing right now, right? As long as we hold this trend line going forward, so no longer now listen. All right. This I'm trying to give myself clarity, so give me 1 second over here, right? That's still an important line here, 1904. If we hold this today and bounce off that, very, very bullish over here, right? But this is what I see in play right now, and that becomes over here, this horizontal line over there. As long as we're above this, right, I do not think that there's any bearish tone or tint whatsoever here on gold, okay? Now, if we come down over here, I would not be looking to take the resumption off. All right, I'm going to go ahead and I'm going to make this one, if we test lower, this outer trend line that we didn't break before, that's going to become my line that I'm going to wait for a break above, which in the future would also coincide with 1904. All right, it's the markets are like an organism that day to day are pricing in information. They're constantly growing and changing, evolving, and you need to be also. This is all still bullish. If we lose this line today, it's less bullish. Okay, a resumption off of here. That's a trade to look for and take here on gold this morning, or in the sessions ahead for sure. Looks like a good one. If we break down below, all of a sudden now we've become neutral, as opposed to the bearish breakout we just had over here. We would become neutral, right? Not bearish, neutral. A break below here, that would be a bearish break over there. However, again, metals are in a bull market fundamentally. Near-term price action, I would not be looking to short. I would just be staying on the sidelines, waiting to pick up whenever I can. All right, so that's pretty clear for myself. Glad to have worked that through. The break below here today, that sends this neutral. Then at this point, what I'm going to do is make this outer line brighter. That will become the line. I'll extend it down. I'll extend it down right now, right? But I'm not going to leave it bright unless we break down further. All right. I hope everyone's on the same page as I am. And we'll keep going. Silver. Silver is looking again, also right now testing that important. By the way, what I just worked out for myself on gold, you could see also on silver here, right? You could see that silver is that same little neutral shape over there consolidating, right? But our analysis on, here you go. You can see it over there. I just went ahead and lowered this line down over here now, giving us that same basic shape on silver. But silver, our analysis is still the same over here. We're still neutral until we break the trend line over here. And, you know, the lower that comes, by the way, right now it's above 26. That's very bullish, looking to attack and to buy to the long side. The longer that we stay, if we do stay within this, right? And if we break out over here, by the way, that would actually give an entry before 26. Right now, as you know, a breakout over here into the 26, avoid, because you don't take the breakout into resistance. But a breakout, retest, and resumption down over here later, that would give an entry. Like I said, things change, you know, depending on what's happening is how we react ourselves. But right now, definitely on the upper end of this triangle, but we are completely neutral and staying neutral here on silver, waiting for it to play catch up after gold makes the break. Before I look at Bitcoin, just wanted to check in over here on WTI, and again, it remains completely sideways. All right, Bitcoin. There we go. So New York is picking that up. It's coming into resistance this morning, though. It's coming into resistance so far this morning. Okay. Bitcoin, let's see what it has done over the past 24 hours. And we could see that we had the breakout of the bull flag. When I say bull flag, right, that was brought to our attention yesterday during the live stream. Before it broke out to the upside, someone was like, hey, that looks like a bull flag. Absolutely is. Broke out to the upside. And then you could see that it closed where? Look on the daily. It closed right at the resistance. Let me clean that up and zoom in for you so you could see what I'm talking about over here, right? Here's the daily candle over here. You could see that we closed right at the resistance, not breaking above it. And then since I've come back to test that breakout of that bull flag, let me go ahead and come back to the 8 hour. You could see here we closed at the resistance on the daily, not above it. And then we've come back and we're testing that breakout of the bull flag right now. So that remains very bullish, right? Breakout, retest, looking for a resumption up. It remains very bullish. What happens if we break back down, back into that flag over there? What are we looking at over there? Well, then we'll just be neutral with a strong bullish bias over there, right? Because we've broken out over here. We've confirmed the breakout over there of our trend line over there, right? So, you know, look, is it possible that we don't hold here and come back down and test this again? Yeah, that would be very bullish as well. No question about it. And then again, as long as we are holding above this trend line over here, right, then it's just all very bullish. There's not much else to say. We also saw Ethereum over here. Sergio, not sure about the line in gold. It seems that it connects. Hold on one second. Pull up the chart, see what you're saying. 818. 818. Oh, okay. So, by the way, so Sergio, this is how I draw my lines. I don't, listen. I always, I don't. Anyway, this is how I draw my lines. This started just like this, just like a rough line like that. I'm looking at the angle like that. I'm not trying to connect price points like this or anything like that at any time. I use, this is how I do my TA. I think my TA is pretty strong. It serves me well. So if you're connecting this point and this point and this point, that's all good. You could do that, but that's not how I do my TA. And also, if you notice the degree of this trend line over here, it's a lot more, how do you say, standard or norm of what you're looking for on a trend line than an angle more like this over here, which is just a very low grade trend line over there. So I see what you're looking at, but it's just not what I am. So Nate is looking at the Bitcoin top range of 15K in a month, then drop down to 12K. And yeah, Nate, listen, I think, and again, it's coming. I don't think it's important to have it yet. But by the way, so these trend lines again will serve us well on the way up over here. Let's just look at what's in the area of 15K. You'll have this trend line right over here, right? It's coming in actually right at 15K if price were to spike up there. But if that happens, into November, it would be right around 15K. So let's say 15K. That's a trend line over there. Above it, you're looking at, 16 and a half. And then above that, we'll get to that. That's around 18. That's where I think we're going to be around December. Now, listen, I think it's really dangerous to try to trade Bitcoin like that because, for example, Nate, this is really important. For example, let's say that like price hits 16K, right? It comes up into this area right there, this trend line right there, and you're like, all right, I think it's coming back to 12K. I'm going to go ahead and exit my position here, looking to buy back cheaper. Yeah, Bitcoin has a habit, especially right now as we're entering that bull market phase of making big moves. And this 16K could break, through to 18 or higher pretty quickly, right? Is it possible by the end of the year that we're testing the all-time highs? It's possible. You don't want to get left behind like that. That's why instead of trying to trade Bitcoin, right? Instead of trying to, by the way, 275 likes in here this morning, 1,400 people. Thanks for being here, everyone. Happy to share this time with you. What I'm trying to get at over here, though, is you're going to have an easier time, a much easier time, much more profitable time, instead of trying to time these cycles, because a lot of traders will sell out at 16K, hoping to pick up at 12K, and then, price will jump up to 18K. They're going to FOMO in, and then price is going to come back down, and it becomes a mess. It's a lot stronger of a strategy to be holding Bitcoin because Bitcoin's a wild ride. It's a lot stronger of a strategy to be holding Bitcoin and then waiting and looking for where you could add to your position during that bull market phase. All right. A lot of people over here, just going back a month ago in the middle of August, right, were looking for much higher prices. A lot of people were looking for much higher prices, and you see that that's not the direction we went. We came back down, So, if you remember, everybody, where your mind was when we were trading right here and what you thought was next, and then what happened next, that's a heads up and a clue that it's not so easy trying to time Bitcoin. It's not so easy trying to time Bitcoin, right? And a lot of people are going to FOMO in at higher prices. So let's keep going over there. I mean, CG, if you watched yesterday's afternoon update, every day we update in the afternoon, you'll see it's not so strange if you look at the central bank liquidity, right? If you look at their balance sheets, worldwide, over $90 trillion. If you look at, the big four, 27, $28 trillion, the expansion that's taking place. Markets trade off liquidity, right? It's not reflective of the economy. There was a nice quote by the legend Stanley Druckenmiller saying the same over there. So, all right. Yeah, that we're all here about building each other up, making each other better, of course. Rex, where have you been? Good to see you here. We've been looking for you for a few days, but there we are. Absolutely, Alan. You're welcome. Just taking a break here as we keep going. Oh yeah, Ron. Ron all in. Nice. All right. Here we go. So what are fundamentals when it comes to the equity markets, right? I mean, listen, by the way, CG, I don't mean to take up space, but I do want to make, anyone who's in my flock is of concern to me, and I want to make sure that they keep things going well. Listen, Stanley Druckenmiller, he has the best record on Wall Street, 30% returns for 30 years. He said the markets are not about fundamentals. The markets are about liquidity. So, I mean, just something to ponder and think about, CG. You said you're a fundamental guy. You have the best trader on all of Wall Street, 30% returns a year. He is the guy who took down the Bank of England, not Soros. And for 30 years, 30% return, he says the markets are not about fundamentals. They're not. They're about liquidity. So it's just something to ponder and think about, always open and learning to grow over here. What's going on with the DXY this morning as the markets are just opening right now, trading at the highs of the session, coming into some pretty big resistance over there. We are looking to see whether or not that holds or we break out. A breakout could really send a stronger dollar move over here. Let's see what's going on. All right. So I'm just looking around at you guys also. Chainlink, let's take a look over here and see what happened. So once we broke out of that trend line over there, that's when we said the run would begin. I was looking and am looking for at least a run up until over here, almost the $13 resistance over there. So far, there's not much else to say, but that looks super, super healthy, right? And then there it is. Chainlink is looking pretty good over here now, and it wasn't until we broke out of that trend line. Ethereum, I wanted to peek in over there because you could see that it was yesterday trading above the 390 level. Remember I said 390 is really when this looks healthy again, and it was rejected. However, again, everything still looks good over here since the trend line break, right? It's come up, came back down, retested 360, resumed right off of it, and it just looks good. There's nothing else to say. Some consolidation now before getting ready to break up. It's all looking good. Crypto looks good. There's no question about it. We're definitely seeing the possibility of the dollar coming into this resistance. If it breaks out, that could continue to put pressure on the metals. That could continue to put pressure on crypto. So we'll see what happens. Yeah, I wish there was a way. There's not really a way, like I could share an individual chart, but it doesn't. I don't know. I wish there was a better way. All right, let's see what else is going on over here today. This morning over here, we were looking at the Euro New Zealand dollar, or I saw someone looking at the Euro New Zealand dollar. Let's take a look at it over here. And yeah, look at that. It broke down at that trend line that I put in there yesterday, right? So you're looking for the close today. That's not a sell signal by any means. However, that could set up a sell signal over here. How would that set up a sell signal, right? Well, if it closes outside of this trend line over here on the daily, because it could still close back above there, right? And then you'd be looking for a retest into this, what was support as resistance, and a resumption off. So nothing happening just yet there. Let me review some of these trades that we were looking at yesterday. Let me start with the US dollar, Japanese yen, and you see all that mess. Let me clean it up for you. But that's just showing that we're in this triangle right now. and we're looking and waiting for a breakout out of this triangle to get a better idea of what is next. You can see as the DXY is firming up today, right? We're coming towards that resistance here as well, right? Listen, this is game time at Turnaround Tuesday. As you come into resistance, you're looking for that resistance to be rejected until it breaks. Okay, so we'll keep watching over here. We're still into this triangle pattern here, and what I'm looking at here is the DXY also still in this consolidation pattern over here, coming towards the top end of the resistance right now this session. Let me take a look at the Euro Japanese yen. So what's today's date? Today's the 13th. The 15th is the deadline. The UK has given the EU to reach some type of deal before the Greek exit, whether to find out whether it's going to be a smooth exit with a deal or a hard exit with no deal. So we're just 2 days away from that. That's why I've been staying away from the pound and the volatility in the pound during this time. So that's all. I don't think the markets are paying attention to earnings whatsoever. Right now, the markets are definitely focused, right, on a couple of things. There are three things. They're focused, first of all, right now on whether or not we have further stimulus coming, liquidity. What else are they focused in on? They're focused in on whether or not there's good news or bad news with the vaccine. Why? Return to growth. What else they focused in on? They're focused in on, you can see that priced into the volatility, on whether or not we have a smooth transition or power of not or not. Right now, the markets are pricing in a Trump victory. Will that change? It could definitely change. We'll see what happens. London, only during London, and that includes the U.S. overlap. The question is what session do I trade in most for Forex? Zero Asia ever. I avoid Asia. For many years, I traded all three sessions, thinking that the more I trade, the more opportunity I have, the more money I can make. That's absolutely the wrong way to approach this. If you're looking for high probability setups, Asia is actually the worst session. It gives the most false signals. By avoiding Asia completely, I was able to drastically improve my overall performance. All right. Gold breaking down over here, right? Losing the 1904 so far this morning. See where it closes over there. Yep. I'm just giving my view, Danny. I'm just giving my view. Right now, the markets are definitely pricing in a Trump victory, and we'll see. And but that's my opinion. You could have a different opinion on that. I do not have a crystal ball. I didn't, I can say, and you could ask yourself the same thing. In 2016, I was dead correct. I was dead right. So I don't think the market cares who wins the presidency. That would be a non-event for the elections. No. So this is something worth talking about. It's very important as we're 3 weeks away. The market cares very much who not only wins the presidency, but more so who wins the Senate. All right. Very, very, very important over here. Best case scenario for the markets is, a mix. It's not one party, whether it's the Republican or the Democrat controlling all three branches. That's the best case scenario for the markets. Worst case is one party controlling all three, the House, the Senate, and the executive branch. So the markets do care very much, though, who wins the presidency, for sure. And Eduardo, you could see that last election, the markets were pricing in a Clinton victory, right? And then markets during that night were selling off very hard. And then when it turned out that President Trump was going to win, the markets made a massive, massive move in recovery. It's one of my best trading days ever. So we'll see. But the question is how much stimulus also, right? The question is how much stimulus also. Do you think the market? So I don't mean look, a lot of people get very emotional and triggered. But wait, do you think that the markets believe the polls? Because I don't think anyone at this point believes the polls, or you have to look at how the polls are produced, who they're polling, right? So be careful. I mean, you should have learned your lesson after the Break exit or after the last 2016 election, that the polls are manipulated to try to sway opinion. They're not showing the accurate, you know. So yeah, and another thing to look at, John, is that those books are very, very light. Those books are very light. Yep. There you go, CG. We'll see. We'll see. All right, let's go. Let me keep going. We're coming right up now into the resistance over here. A massive move now, I'm going to say, on the dollar. A lot of strength coming into the session over here. I want to take a look at the equity markets and see how they are. We gave a pretty great look at Bitcoin, and so a lot of people. So let me just talk about this. A lot of people. I don't know what happens to the markets from here, which is why this morning I'm like, you know what? I'm just very neutral. There's no clarity whatsoever. So I don't know if we continue rising. I don't know if we trade sideways, or I don't know if we go down. I don't have an edge here. I'm neutral. So a lot of people are always like the markets are going down, and that's been going on for a long time, right? I could come back down to like here we are in May, and everyone's like the markets are crashing, 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 the economy sucks. But none of that has happened. So I don't think here that the markets are crashing or have any indication that the markets are crashing. Now, there are times, right? And over here on the Nasdaq, they're right recently over here, as it looked like we traded below this big trend line and then broke down over here. I look to attack, because that's a possibility where the markets could see some massive follow through. Didn't happen, got back on the right side of the trade right away. And if we get any type of technical breaks or indications to trade to the downside, I'm there. But right over here, well, I see the market's a stone throw from new all-time highs. So I don't have that mind frame that the markets are set to crash and or are crashing, right? Right now, the markets have regained a lot of that damage that was done to them over here and look pretty good and healthy. So I don't, could that change in an instant? And if it changes, I'm going to, instead of saying, well, today I'm neutral because I don't have an edge and I don't have any clarity, I'll be like, all right, look, I'm looking to try to establish a short position here. Let's see where it takes us and what happens. But, I can't say that the markets are set to crash here and therefore Bitcoin's going down, right? I can look at the chart of Bitcoin and say, wow, we just broke out of this trend line, right? Well, first of all, now I could say, look, this has started the bull market on Bitcoin, the break of this trend line over here. Since we've broken that trend line, all that we've done is come back and retested that exact level, and so far seem to be resuming off of it. I know I need to break out above here to confirm that, but right now this looks uber bullish. Yeah, there's nothing negative about it whatsoever. And I'm worried if we trade below here, that could close the CME gap easily. But I believe that, again, you should have orders here, because that would probably be a wick. There's a lot of orders over here looking to pick up Bitcoin if that does happen. And my base case is that doesn't happen. It could happen. I'm aware of it. We could even trade down over to here. Both of those things could happen. But this looks super bullish, breaking this trend line over here, breaking down over here. I'm not looking, or seeing that, right now that the markets are coming off or are showing some signs. This is all we've seen. We saw that descending wedge. We looked for the breakout, the retest. We're able to get a nice chunk of that, not the whole move, but a nice chunk of it. 3.4%. It's good. Over here on the Nasdaq, bigger trade, right? It was easier. 5%, even though it's gone up about 7%. Big deal. But that all looks. There's no reason, if I look across all the indexes right now, to think that they're going to be under pressure or crash. I'm just neutral. Today I don't have an edge. All right. I mean, that's the way I see it. And at the same time, Gary, Gary's saying with all the liquidity, a stock market crash is unlikely, and that's true. And at the same time, we're always, as traders, we're always worried about our risk and what could go wrong. All right. What else do we got going on here this morning? Let me check out over there. I'm just catching up with a couple of comments here this morning to keep going over there. We'll see. Anthony, listen, no one has any type of crystal ball. We'll see what happens. I don't think the question about is who wins the election. I think the question is whether or not the loser concedes the election. That's what I think the problem is in this election. I don't think the U.S. has ever had that problem before. Listen, one side has made it abundantly clear already that that's in the cards. So, I hope for the best, prepare for the worst, and that's it. That's all we could do. The liquidity is a fallacy, man. CG, we see things very, very differently. All right, let's keep going over there. And again, and don't even consider myself, but do consider Stanley Druckenmiller. I mean, I'm just Jordan. That guy's a legend. You're going against that. What happened with Apple, right? Yesterday was they released the new iPhone. Is that true? The iPhone 12, right? Look at that breakout ahead of the news. Is that a sell the news type event? I don't know. To me, it just looks like listen, Apple over here, again, just look at the indexes and we said they've repaired all of that technical damage that took place. There's nothing bearish about this price action whatsoever. But after seeing a big breakout of the channel and then seeing price consolidate, well, so far that's super healthy. All right, but there's no edge here on Apple, and there's no edges on the indexes today at all. We need to wait until something gives the Apple events today. Thank you, Mario. We need to wait until there is some type of clarity. Is that the guy with the paper Burger King hat? Steve Van Metre. I think he's the guy with the paper Burger King hat. Yeah. All right. So let's keep going over here. Let's figure out what's going on across the markets. Canadian dollar, Japanese yen. Right? This was the Canadian dollar's been looking strong. And over here, we've seen that price. By the way, great interview on Real Vision with who is the Bond King? Jeffrey Gondelak, right? Great interview. If anyone hasn't seen it, it's on Real Vision. It was Raul's one of favorites as well this whole year, right? So you got to earn that title. So here we come over here, and we've come into this trend line over here, and resuming out of it. That looks over there like a nice bullish setup over there. That's a conquering the market setup all day long. And you're looking over here a little bit higher as that first area of resistance before you do anything. Is that resistance, or it should be a little higher? I think it's even a little higher. I'm looking over here let me put that in over there. There we go. All right. Anyway, nice looking setup there on the Canadian dollar, Japanese yen. Now, could the yen, by the way, be picking up here? Let's take a look at all these yen pairs. Why? Because there is a high risk event coming into the markets right now. Yep, Greg, let's take a look at it. Is that what you're looking at? Yeah, I mean, if anyone has a better line, let me know. But that's something that should be on the chart if you're trading the Canadian dollar, Japanese yen. Thank you for that. Huge comment over here, Kips. because that's actually an enormous edge. That's actually an enormous edge, and the more patience that people express in the markets, how could you express patience? Well, today, for example, you have people probably I gather shorting the equity markets, right? But I also gather those same people have been shorting or attempting to short the equity markets for the past week or so. But here they are again today, and but that today they feel good. But to me, there's absolutely zero edge whatsoever, right? If anything, it looks like healthy consolidation for sure, but there's zero edge yet. I don't see anything that's clear. Jim Rogers, one of the best quotes he ever said, and it took me actually many years to understand it. He's like, all as I do is I sit there and I wait until I see money lying on the floor, and then I go over there and pick it up. You don't want to enter something unless it's clear. Patience is a huge edge. Being selective, right? That's a huge edge over there. That's right. Well, it is. That's what we're looking at. That big gamma squeeze. There's a good article on Zero Hedge right over here. Go ahead and share that, which links to yesterday's article about the gamma hedge going on. And just a heads up, going back down over here, going back towards the end of September, I was talking about in all of the afternoon update videos, all of the people record short the Nasdaq and how they looked to be on the wrong side of the trade and how it looked like they were going to have to cover and that was going to cause a squeeze. Up till today, though, not even half those positions have covered. Still a lot of people short the Nasdaq over there. Mike, short means to sell. You could either buy if price goes up, you make money, or sell or short, where if you sell and price goes down, you make money. However, if it goes up, you lose money. Yeah, and right with you, brother. I've been also saying right now that everyone should be neutral on silver as well. That's gold. I've been saying that everyone should be neutral on silver until we clear 26, right? And that remains the same. What else? What else? Let's see what the dollar's doing here as it's 20 minutes now since the market US has opened. The equity markets, the bell has rung and we've come so far into that resistance. We have touched it and not much else to say yet. I provided the link in the YouTube video. If you go find it from last week in the comments, there's a link to that chart. Listen, so Luciano, there's a couple of things. There's a couple of ways to play the markets. You have people, right, who like come up with these like macro theories. And then they try to, what do? They look to, and this is, by the way, how macro used to work. It's kind of changing, but there's still some people that do it. You used to be able just to like pick a narrative, right? And then raise a bunch of money around that narrative. Think Peter Schiff. The guy is right on gold. The guy is right on a lot of things, Peter Schiff. There's a lot to learn from Peter, but his timing is just completely awful. Why do I say that? Well, for 8 years, during the whole bear market of gold, he kept the same narrative and kept people on the wrong side of the trade and lost a lot of people a lot of money because they could have really been making a ton of money in the equity markets and then at the right time started accumulating gold. But that's like picking a narrative and then holding to that narrative until you're right. So, is that the right way to do things? Some guys used to be able to raise a lot of money and make a lot of money doing that. You have things like the dollar milkshake theory. It's a similar thing. You could hold that theory for years and years, and it could be the next liquidity crisis might be years away, right? I said during the March crisis when the Fed came over there and printed, I said, well, you know what? It could be 6 years before the next crisis, and I stand by that, right? So you have, and then all of a sudden, 6 years later, all of a sudden, there's again a dollar crisis, and you're like, yeah, see, I was right. Look, that's one way to do things and look at it. That's not myself. right? What I'm trying to do is I'm just trying to make a living swing trading, looking at what's going on in front of me. I happen to believe that the markets are extraordinarily difficult. So I have this like really, really strong sense of respect for the markets and humility, and it serves me well. So instead of trying to like talk about like what the velocity of money and the banks are, I don't need to think about that at all. I just need to follow what's happening on the chart, right? And then I could, stay on the right side. Are some points difficult? Yeah. Some points are very difficult. Look at all of this, right? Remember, I kept us neutral over here through all of that. That was a very difficult portion to trade. No question about it, right? But, listen, that's what I do. I just try to do my best, and it's not always right. Remember down over here, I tried to attack to the downside over here. Yeah, but my risk was capped very short. I don't need to be or expect to be right all the time or even close to it, right? If I'm right 55% of the time, I'm making a great living, first of all. Now, but what I can't do is just be like, I'm going to pick a direction and then hope that happens. That's what I can't do, right? So what I'm looking to do is short here, cap my risk up. I'm wrong. Oh, but like when I'm right, I'm looking to push that trade, and that's how you make money in the markets. So a lot of people, have a lot of opinions, but like if you're on the wrong side of the trade, you're on the wrong side of the trade. There's nothing else to say about that. That's the bottom line. Yeah, not me though. Some people could do that. Not me though. For sure. Not me. My win ratio is much higher than that. And yeah, if you have, really big wins, that's more of like a venture capitalist. They could be right 10% of the time and make a lot of money. For even 45%, you could be profitable easily with 45%. There's no question about it. There's no question about it. And the better strategies and trading systems are going to have a win ratio somewhere in that neighborhood, somewhere, between the low 40s and, even up to the low 60s. All right. Where are we at? I have no idea if Apple's going to sell off, if Apple's going to pump. I have no idea. Right? 80%, that's a pretty bad win ratio. That's too high. That's going to fail. That's not good trading over there. Whether you want to hear it or not, All right, DXY. Oh, Mr. B, that doesn't make, listen, wrongly. That's neither here nor there, right? That's not. I had in 2013, I was working on 8,500, 8,000. I was up to as high as 8,500 in 1 year. Wound up losing half of that just as that's not the way to trade. This is not the way to trade. I don't aim for a win rate, Jason. I don't aim for a win rate whatsoever. I just take each individual trade following my strategy. That's what everyone should do. You should not aim for any type of win rate, right? Win ratio. What you should be doing is trading your strategy. Because if you're focused in on risk to reward, if you're focused in on win percentage, you're not focused in on the price, you're not focused in on the individual trade. So Greg has pointed out that I focus a lot on what not to do. And that's what not to do. Do not focus in on win ratio. Do not focus in on individual win to reward. Focus in on what's happening. QE is hyper asset inflationary. Right there. QE is hyper asset inflationary. Fed is printing, stocks go up. All right. What else? Weird session today. That's 100% correct. That's not how you trade. You don't. Anyway. What else do we got going on over here today? Let's take a look at Bitcoin here. Breaking down below the breakout so far. Again, let's see on the daily time frame. it all, in my opinion, continues to look super healthy and bullish. What set off that bullish perspective over here was the break of this trend line over here. The confirmation was this outer lighter trend line over here, right? So as long as we hold that, that to me will be very bullish. By the way, there is some local support right there. You could see that was the resistance. That was the support. Then here it was resistance. So as long as we hold this outer trend line over here, Bitcoin, probably the rest of crypto, looks very, very bullish. Which crisis was the most difficult to Roman? So this is, but both of those were some of the best trading environments for myself ever. Both those crises were this year. Roman, you've been with us throughout the crisis, and on the short side, cleaning up not only on the S&P 500 but also short against the Australian dollar, New Zealand dollar with the Swiss franc and Japanese yen. The crisis was absolutely phenomenal, and then the bounce over here also. This to me was the most difficult time all year to trade. This area right over here was the most difficult time to trade all year long. And the second most difficult was this area right over here. Those were the only two difficult periods to trade this entire year. Now, the 2008 crisis was just equally as, it was fantastic. It was just absolutely fantastic. So both of them, trading in a crisis, in my opinion, is actually very easy to trade. So, but they're very rare. The problem is that people are always looking for a crisis. People are always looking for a crash, and they're very rare events. So you had the dot-com bust, right? And then you had, the 2008 crisis, and then now the 2020 crisis. That these events are very rare. People are always looking for them. Cup and handle on what are you looking, Sam? Right? What are you looking at? A couple handle here on the S&P 500. I mean, I don't think that anyone should subscribe to the dollar milkshake theory. First of all, I think that you should be aware of the dollar milkshake theory for sure. Because if you start seeing problems again in liquidity, if you start seeing problems in the repo market, then then you could say that there's a good chance that we could be seeing pressure from the dollar milkshake theory for sure. No question about it. But if you're subscribed to the dollar milkshake theory, I think you should also look at Lynn Alden. They're basically the reverse view of that. And by the way, I very much subscribe to her thesis more than the dollar milkshake theory's thesis. All right. Now, who's right? I have no idea. I'm not trying. When it comes to the whole inflation deflation debate, I think it's a waste of time. I think it's fun, but as a trader, for me, it's a waste of time. That's not helping me whatsoever. I need to focus on what's in front of me. I need to focus on what's the chart, what's happening on the charts. Now, from from an intellectual perspective, I enjoy it. I'm passionate about it. I love learning about it all. But anyone who thinks they're right, that's ridiculous. We were pointing out on Twitter the other day, about Dr. Lacey Hunt, who's been on the deflation trade for 40 years. And he's been right for 40 years. And to stick on a trade for 40 years, man, he's got a history that he's coming off of. And now he's looking. He sees further deflation, but he's looking for the turn to inflation. That's what everyone should be doing. Again, back to Stanley Druckenmiller. He's like, you know what? I still see a deflationary environment, but it is possible 2 to 3 years from now, all of a sudden we hit inflation. That's a broad stroke. I think it's the best one. I think a lot of people are getting caught up on, the inflation, deflation. Banks are lending, banks are not lending. But what does that do for you? What does that do for your portfolio today? So on the S&P 500, okay, I see what you're looking at now. So are you saying, is this like a cup and handle? I mean, I don't think so. But does it have the same dynamic as a cup and handle, Sam? Right? And on that part, I could say yes. From my experience, usually the lid of the lip of the cup is showing symmetry. So if this was like more rounded at the bottom over here, and then you came up to the top, and then you put the handle in over here, that's a cup and handle for me. So I don't see it as a cup and handle, although does it have some of the similar dynamic? Quite possibly, right? Maybe. But I also don't look for long-term price patterns like that. People are lucky. On the monthly, do you see a head and shoulders? It's a common question. Well, do I see a head and shoulders? Not only do I not see a head and shoulders, I'm not even looking for a head and shoulders, right? It's the monthly. What am I going? Am I placing trades that last decades? No, I'm just focused here on the 8-hour. So what I last was looking at once we found it was this descending wedge, which proved to be, what's the average return yearly over the last, 100 years in the S&P? Is it 7-8%, right? This one trade almost yielded 3.5%, right? So make a few of these a year, right? You're greatly outperforming buy and hold strategy. You could do way better than that, first of all. But what I'm looking at right here, right now, is just complete unclarity. What I'm seeing is a big up move, which means I'm looking now for consolidation, but this is too soon for me to buy into. It's just too soon. I need to wait. And how long we'll be waiting? Once it becomes clear of what's next, then I'll be looking to plan my next move. But right now, we are in no man's land, right between resistance and support. Just in no man's land, right? No man's land. I have a bullish bias still, a strong bullish bias, right? But not ready to attack. Now, in my opinion, that would be a hyper aggressive entry over here. I could see the entry CCI is now pulled back. It could be a very, very good entry, by the way. A resumption out of here. This could be a very good entry. I'm just, for whatever reason here, I'm cautious. So I'm cautious, right? So, again, I also think one important lesson that I learned throughout my career is, I used to, after a really good trade, first of all, get back into the market. So tell me if this sounds familiar to any of you. After a really good trade, I used to get back into the market really quick, really big, and really aggressive. And usually I would give back money. So coming off this trade, which was, we just booked some nice profits, I'm a little hesitant now, right? I don't, it's not free money I'm playing with. That's money I earned. So I'm not looking to give that back. I'm waiting for something to become clear before I start looking to take a new position. Okay? So, and again, this is kind of, it's hard to say if this is the first pullback or this is the first pullback, because the true trend went negative over here, but it's still kind of the first pullback. By the way, the first pullback always leads, we're going to talk about that in the training class again today. Also, Greg sent us that document summarizing the last one. We're going to share that. Anyway, I'm just indecisive. And if I'm indecisive, I'm not going to take a position. What do I think about that the recent rally was set off by so, all right, this is a good question. I'll give my thoughts on it. Ego is a killer. So Kips, by the way, I love your comments. Thank you for always sharing, by the way, Kips. But it is. Euphoria is a killer. Ego is a killer, right? And I talked about that in one of the comments on YouTube yesterday, and I was like, I don't know. I'm having, by the way, 2020 performance-wise is a phenomenal year, but I'm always have this healthy respect for the markets. I always come from a place of humility, and I understand how quickly, if I don't, the market will humble me, right? It's really important. By the way, the question over there, I wanted to thank you for that, Mr. B. The question over there, though, that's right, Model 3 Life. This is what a trader is. Take our time and watch for the best risk reward. If you're in a rush to make money, you're basically in a rush to lose money. And if you're taking your patience to make money, you're going to start making those shots. All right. So this is a question that I do want to talk about. It's a good one. What do I think about the fact, my opinion, that this recent rally was kicked off by a Trump tweet about stimulus that never materialized? My opinion is that the market was not pricing in stimulus this year. Why do I say that? All right, so this is not just my opinion. This happens to also be the opinion of many trading desks throughout the world, right? Why do I say that? Well, we remember that tweet also said the reason he was ending negotiations was because it was not being negotiated in good faith. We started off the negotiations with one side asking for $2.3 trillion and the other side asking for half a trillion dollars, 500 billion. The side asking for a half a billion went all the way up to $1.6 trillion, and the side asking for $2.3 trillion went down to $2.2 trillion. So one side was not negotiating. One side obviously was not looking for a deal, but that was clear to everyone. No, so the markets were not pricing in a stimulus, in my opinion, before the election, as well as once the passing of Ruth happened. By the way, there's a documentary I'd love to see on her. But what I'm getting at is here's the Senate, instead of passing a stimulus bill, really need to focus on passing the nomination for a Supreme Court, right? Is it possible they could do both? Yeah. Is it still possible they could do both? Listen, if the lawmakers want to do anything, they could get it done. It's a question if they want to do it. Now, right? So, by the way, if you look at the markets right now, pricing in a Trump victory, right? Again, I said the markets would have to be trading. I said this a couple of weeks ago. The markets would have to be trading somewhere between 32 and 31. That would be very bad for Trump, and it could still happen. And if that's happening, there's a good chance he'll lose. But the markets up here, it's almost ensuring a Trump victory. So, my opinion. So, I don't think that the markets so much rallied off of the fact that stimulus was going to get passed anytime soon, but stimulus is going to get passed. And I've said this now for months. You have to pay attention to signal, not noise. At what time the stimulus passes, that's noise. The signal is that stimulus is coming, right? The signal is that it's not just that, that the Fed expanded the balance sheet by 3.1 trillion, but that they continue to expand it by another $1.4 trillion a year right now, right? The trajectory is higher, not just from the Fed, but from central banks around the world. That is contributing to liquidity. That is contributing to higher asset prices. That's the signal that I'm focused in on. So I don't think that it means anything that the stimulus is yet to pass. I do think that one way or another, because if forget looking at the stock market, but look at the economy, people are really struggling. People need the help. There's no question about it. In my opinion, that stimulus is coming. That's what the signal is. Well, there is a bunch of data showing that the incumbent president wins when the stock market is up and loses when it's not. So, do people care about the stock market? I think they do. I think they do. And a lot of people really care about their 401ks at the end of the day. Matt Adams, I've been clear that I believe that gold is in a multi-year bull market and that you should be accumulating gold. Why not trade gold right now? Right? Well, yeah, I was getting ready. I tried, first of all, taking a buy over here, all the way down over here. I tried attacking prematurely over here. It was an aggressive entry, and then it was stopped out, right? Was my stop a little bit too short? Should my stop been below this trend line? Yep. My stop was too tight. That's okay. It was an aggressive entry. This breakout of this trend line over here, that is setting up no longer aggressive entry, but a good technical entry. But it is not panned out. We've not resumed off of it. Instead, we're falling back. The retest has been a failure. So now is not the time to long gold. You're back neutral. You see this triangle here? This is neutral in this triangle, right? on the upside and downside. And until you break out of this, right? And if we break out to the downside, I will not be looking to sell gold because I'm just looking for a place to accumulate gold off of support. But a breakout to the upside, that sets off swing trades. Do you buy over here during a consolidation period? No. You don't know which way it's going to break. It could break up or down. That's why there's no looking for high probability trades that could push multiple levels, multiple support or resistance levels, things that I could profit from. Guys, I didn't realize the time. It's 10:15. I got to cut this short. We have a training session in 15 minutes. I'm going to go ahead and have a piece of fruit or something, prepare for that training session, and go live with that. So there's a lot happening, some good discussion today. It's possible we get a breakout over here today. I'll be looking forward to touching base with you all this afternoon. Thanks for being here. Thanks for spending the time. I wish we go longer, just not today. Tomorrow we'll be on it for sure longer. It's the same second. Look at our analysis on the indices. Right now, I'm saying it's time to wait. Everything is so bullish, but we just had a big move. Whether you're looking at the indexes or on any individual stock, we need to wait until things become clear again for our next move.